everybody. Welcome to TraderMerlin Show. It's Taco Tuesday. Hope you had a great day out there. Some nice moves in our markets. Hopefully you guys got a chance to capitalize on some of those. Today's topic, we haven't talked about this subject in quite some time, and I'm not exactly sure why. Spot Forex markets is going to be the topic du jour today. I don't want to say we've neglected it, but we're going to talk about something called trading Forex dimes. I know it sounds a little bit strange, but I'm sure it'll all make sense here shortly. Joining me, from, I'll say, an undisclosed location. We've got Josh Lillquist joining us today. Josh, how you doing?
Thanks, Merlin. I'm doing really good. I'm a big fan of the show. I'm glad to be on. You're really doing a good thing, and I think helping a lot of people learn more about the market. So I appreciate being on here today.
As are you. I mean, you got your own show, Investing with Confidence. You're out there trading every day, and it's funny because when I look at the Investing with Confidence channel, and I've been a guest on it, so thank you for having me on. You have the same illness that I do, and it's a sickness that's just worth dealing with, which is the wanting to talk about trading in markets and investing all the time. It's an illness.
It's fun, anywhere you go. Sometimes people will ask you like, "What the heck do you do?" and you explain it to them, and it's one of those things. They look at you like you got two heads sometimes.
Yeah.
So it's almost like you don't even want to talk about it with some people.
But we'll talk about it with anybody. We're a quick shout out to everybody. Hello, Big Ed. We missed you yesterday. I was giving you a hard time about my Ethereum purchase, but you can watch that one and catch up. Katut, good to have you with us. It's got to be the wee hours in the morning down in Bali. One day I'm going to come visit. I love Southeast Asia and all those areas down there. Nice warm weather. So good to have you with us. Meznak, that's a new one. Good to have you with us, Meznak. For those of you who aren't new, hit that subscribe button. MTB, Jerry, Tom, Jay, Bess Entertainment. What kind of entertainment you do, buddy? Good to have you all with us. Les Gold, Sue, and Pepe as well. And Thomasina, good to have you. All right, before we dive deeper into trading the dimes, what that means and how it applies to different Forex instruments, I'm going to do what I normally do for first-timers on the show, which is go through a little bit of a trader profile and ask Josh, what are the answer to 3 specific questions? Those questions are, what instruments do you trade? How long have you been trading? What instruments you trade, and what's your trading style?
So, I've been investing for probably since about 2010, right around there. Great time to start investing, by the way. Mm-hmm. And I kind of got a little more active, more involved. 2012, 2013, started to look into it, started to learn about it, what it really is. And then, so I've been trading a lot of Forex lately, obviously, hence the Forex dimes. Especially the past year, I actually got back into stocks a little bit more. To be quite frank, everybody should have been in the market the last year or so. It's been such a bull market. I remember my first stock back when I started was WWE. I love wrestling. Big wrestling fan, and obviously didn't know what the heck I was doing. So getting into the markets that way, learning the hard way, obviously, but kind of gravitating more towards Forex. I've done some futures. Stocks, and then also crypto, big time crypto since about 2017. And as far as my style, I would say more of a swing / position trading. I'm not big into fundamentals, and I don't like to create opinions. I have a very addictive personality. So if I get an opinion, I'm going to go for that. So I try to keep it simple. So not much fundamentals, mainly based on the chart, basically price. On a price chart. So I would say more swing / position trading on investing.
Nice. All right. So really starting off with the investing thing around 2010. So you got a good 11 years under your belt looking at Forex, stocks, crypto, and he is looking more towards swing and position, a little bit on the longer side of things. I have the gauntlet has been thrown down here. Tom Barr says, challenge, make Forex interesting to an options guy. Let me ask you that. Why is it that you chose Forex? What drew you to Forex? Because for some, like Tom, I think that they may look at it as it is a boring asset class, but there certainly are some great benefits to trading Forex.
Yeah, it is we'll call it a slower moving market. If you think about it, it doesn't move very fast. It facilitates international trade and investment, so that has to go slow. They can't change monetary policy because that will affect the companies basically doing business in that country. So, for that listener question, I forget who it was, but you can trade options on the Forex market. You have the ETFs that you can do. They're not very volatile or liquid, so you got to trade the right ones. But in the Forex market, I found it the best for mainly because you can get your risk down, in my opinion, to the penny. You have it's measured in a pip, and you can get it down to a penny. So rather than like futures, which I also have traded, I don't think I mentioned that, you have set contract prices. I loved it where if you're going to do a longer term strategies and you have big areas where you want to get in, you can get in with pretty much any type of or any size of an account, because you can scale it in based on the leverage. You have 50-to-1 leverage with that. So,
Right.
And I do like the aspect of the currency. I mean, it rules the world. It's the largest market in the world, roughly $5 trillion traded per day. So, I mean, that's the best. You got to do the biggest and the best out there.
I like it because it's the broadest. And I think for me, when we look at equities, let's say, for example, you're in, I don't know, you like Apple. Well, you're going to start looking and paying attention to a lot of the tech companies and what's going on. Does that make you necessarily a more educated, informed person? Well, yes, with regards to that specific asset class. What I like about the Forex is, instead of me looking at the fundamentals of Apple, I'm looking at the fundamentals of a country. And you start to get a feel for how an economy is functioning, what the people there might be going through compared to what we're going through. I like that because it feels like I'm informing myself about the world. And I was asked once, many, many moons ago, somebody asked me, said, if you were to be president of the United States, what's one thing that you would do right away? And I go, this is going to be a radical one. I go, I would make it mandatory for every child, by the time they hit 18 years of age, has to live outside of America for 1 year. Number one, that would reduce a lot of the ignorance, the thought that America is better than everybody else and nobody else everybody else is garbage. We all have problems, guys, and it's nice to see how other people view America. But I think it would remove a lot of the issues that people have, the stigmas about different countries, and it would make us much more open-minded. But that's why I like the Forex, is I'm now thinking, I'm like living in Europe for a year mentally as I look at these economic data saying, all right, how are they doing with their growth? What are their employment numbers? Where are they similar to what the U.S. is like? And from that, we can start to make longer-term investment decisions or even short-term ones based off the technical. So that's one of the reasons I love Forex.
Yeah. Plus, if you travel, I mean, that may help your traveling. I mean, you want to have your dollars go the farthest, so...
yeah,
it'll help you in your everyday life, really.
Absolutely. Especially if you're planning a trip. Market timing with Forex is a big one.
Mm-hmm.
All right, let's talk about trading dimes. I had the graphic up here. I'll bring it back up just for fun, but there's the topic. Notice I got some nice dimes in the background. Trading Forex dimes. What do you mean by trading Forex dimes, and how does that apply to your trading strategies?
So one of the things I had to do in my learning process, but getting in and kind of honing my skill, is I needed to keep things simple. And if you think about it, I should have did this earlier, but if you look at a picture of the floor back in the 80s, 90s, maybe early 2000s even, you seen prices everywhere, right? And there wasn't charts on the floor. They were basing everything on price. So in big institutions, big banks are basing their decisions on price. I've been able to surround myself with some very smart people, and a lot of the things that I've learned is the institutions are kind of trading, sometimes, especially in the Forex market, taking the other side of the trade. So they know what the public is doing. So I want to trade like those big institutions, and whole numbers is a lot of the strategies that they do. So one of the things I've been able to do is kind of create a strategy that, for one, I can still do other things and be able to trade more on a longer term basis. I'm looking at it every day, but I'm not analyzing and getting into new positions every day because I have them set for me. So I'm looking at prices from, we'll say for the Australian dollar, which is right now at 77.50 right now. I'm looking at prices 70 cents, 80 cents, 90 cents, and what's going to happen between that 70 cents to that 80 cents, and breaking it down into a little bit smaller of a time frame, and creating, we'll say, a bias on which way the market's going to go. And I can share my screen if you want me to show a little bit on that.
Yeah, sure.
So I'll just share my screen here, and let's see here. Where I want to be. You able to see my screen here?
Yep. There we go. Got it now. Yep.
The dark screen?
Yep.
Perfect. Yeah. So with the dimes, so if you look at the Australian dollar here, on the right side, I have a weekly chart. And what I'm looking for is to get once I hit this 70 cent mark here, basically it's a reset for me. Nothing's happening. I don't want to be in no man's land. And I had another show called Forex Daily Dimes. I'm doing more of the investing with confidence now on YouTube, but I was explaining it as kind of a thing. I'm a big sports guy. I love playing basketball, played basketball, high school, college, and everything. And I kind of created a basketball court with it. So you think you got your baselines from 70 cents to 80 cents, and you have your free throw line on the bottom, free throw line on the top. So once we get a close above on a weekly chart, above this dime, I call it a hezzy line. Basketball, you got the hezzies. You remember LeBron James talking about you hit the hezzy in the fadeaway, right? So
I ignore LeBron James at this point. So,
but he is a great basketball player. I don't like a lot of the stuff he does, but I do like his ability. But still, they have once you get that close above on a weekly chart. My bias now is saying institutions, that battle. If you're looking at the chart here, this battle has been won by the bulls.
Yep.
Right. So I'm actually only buying. So what I'm doing is I'm saying, okay, from here. Now my next target is going to be 80 cents, okay? So what I'm going to do is break it down to a 4-hour chart and break it down into quarters. There's 4 quarters in 1,000 pips from 70 cents to 80 cents, right? So, for instance, the Australian dollar has been phenomenal since this close of November of 2020. So if you bring it back, I would go down to my 4-hour chart, and once I get a close above so it starts at, we'll say 72.50, goes to 7,500, and then 77.50. So once I get a close above 75 pips above one of those whole numbers on that 4-hour chart, so it would be 72.50, so that would be 73.25. I want to be long. So if I get a close much higher than that, I'm gonna put a limit order at that 73.25. and wait for a pullback to get in there. But I want to take that to 75, right? Mm-hmm. Once I get to 75, okay, now I'm resetting on this lower time frame. I'm still in a bias. It can go back down to that 73.25. I'm buying again because I still have that bias where the banks or the smart money has won the battle. Once I get to 75, okay, it resets. I'm going to take it back up to 77.50. And it's not 100% right, but you have, for instance, where are we at here? November. We had a nice move here. And if you think about it, I talked about earlier at the beginning of the show, things trend very well in the Forex market. Back in March of 2020, it was at 55 cents.
Right. I think that's what a lot of people love about it as well, is when you get the trends, they're usually very strong, and they'll, much like the law of energy, it will continue in that direction until something stops it. So ride those trends is a great tactic in this market.
Mm-hmm. And that's the thing too. And then I'm just going to take it all the way back up to once I get to that 80 cent mark, I'm resetting, and we can go look at another pair real quick just to explain what I'm not looking at or what I'm waiting for now. This Great Britain pound has been phenomenal this past year as well, from November up until February. Now we're in no man's land. Right. Mm-hmm. So I did get a close below this. So there was opportunities there, probably a couple losses, no big deal. But now I'm in no man's land. I'm at half court, and nothing's happening there right now. So I want to wait until I get a close above, in this case on the Great Britain pound, 42.50, or a close below 37.50, and then I'll go back down to my 4-hour chart and start over again.
On that you got your the British pound up there. When we look at this one, do you ever sit there and say, I'm feeling bearish, and kind of start to go more heavily bearish, or you just say, look, the trend on that right-hand chart is just so strong that I'm not even going to consider going short? Because, for example, you're at the 142.50 mark. You got your top line. Does that become your short, like, might pull a double top, or is it just completely off the table for you as someone who's looking for trends to go short against that uptrend?
There's ways you can do that. I've found in my experience, just keep it simple.
Yeah.
Once I get my close above there, I'm going to take it back down. This is going to be a battle in between here. You have times where it does, as you can see here back in February, it bounced right off that 42.50, mm-hmm. right? It could do that same thing and go back down like you said, but for me, you're creating an opinion there. And I don't like to have those opinions in the markets. I want to go based off facts. That's helped me. 'Cause like I said, you have personalities, and if you follow that personality, you may get yourself caught up because you can't back test then.
Right.
Because you're changing things.
Good comment here from Pepe. He says he trades similar to Warner, or at least he trades the same, or at least similar. Yeah, and it is. Obviously, Josh has had the opportunity to learn from David Warner, and I think the important thing there is Josh has, at least from my understanding, you can correct me if I'm wrong, Josh has taken that strategy and kind of morphed it to yourself, which I think is what everybody should be doing, and not say, hey, I have to trade the same as someone else, but if I can learn a tactic or a strategy that I see works and I put it to action and I implement it and it does work, then I'll stick with it. And yours is, I would argue that you get more trades because obviously shooting for dimes is much easier than quarters.
Yeah. I mean, once you get down to the from the dime, if you're trading just the dimes, it's gonna be a long trade. I mean, unfortunately, with this platform that I'm using, the interest you're basically paying no matter what.
Right. So
there's no carry trade anymore. That was back in late 90s or early 2000s. Kind of the carry trade was working, but with that longer term strategy just didn't make sense for me. And then if I wanted to go to a monthly chart, I could, but I mean, still, you're not, doing 500 trades a year with this. I mean, you're going to be probably anywhere from the 1 to 300 trades a year based on the strategy. So that gives you the ability to not have to be on the computer every single day, which really resonates for me.
Yeah, absolutely. And again, there's so many opportunities out there. I think that the important piece here, and as Brendan says, it's hard to evaluate one piece of junk floating against another piece of junk. Brendan hates fiat currencies, and I'm with you, but they're a necessary evil, and there's tremendous opportunity, especially for those of you who live outside of America. So when you look at something, for example, we were talking about the CAD. I saw that one came up here, so I'll bring up on my screen the CAD. You look at this most recent move, this is a colossal move in the U.S. CAD on a weekly. But percentage-wise, it doesn't seem like anything that's that crazy. For example, 17%. You're like, well, Bitcoin dropped 17% in 2 hours. This is nothing. Yeah, but you get the benefit of having 50-to-1 leverage in the U.S. And if you're outside, guys, some people can get 500 or more leverage. I don't know what it's like in Canada. My guess is it's probably fairly close to the U.S. But I know a lot of European markets, you can get 500-to-1, which is great, but also extremely dangerous because if you're on the wrong side of something and leverage is that high, your account is evaporated and will just disappear very, very quickly.
Yeah, just a comment on that, Merlin. The leverage having 50-to-1. I mean, think about the stock market is where everybody starts. I mean, I started in the stock market. I think everybody kind of starts there.
Yeah, it's everyone's marijuana for the markets. Gets you in the door.
Yeah. When you have that 50-to-1 leverage, you're probably not going to use it all. I mean, if you're using 500-to-1 leverage, that's very, very risky. But with the Forex market and doing the minis and the micros, or for those people that want to do standards, a lot of people don't have 50, 100 grand, 200 grand to trade and invest. It's a lower entry point in the market because the broker requires less. You can, in my opinion, that's less risk. You're using less of your dollars, having that leverage and controlling a much larger amount of it.
Yeah, I mean, it's an interesting perspective. I don't know if I necessarily would say it's less risk. I mean, you're running you're risking less of your capital, but the risk of you losing your capital is much higher because, let's be honest, most retail traders lose money.
If you're not protected, correct.
Right. Yeah, and I think it's really important that anybody who is looking at Forex, make sure you understand what your pip value is and what you can stand to lose. I would certainly encourage you to trade with micro lots just to start off to get a feel for how it works. And remember, when you jump from currency to currency, they do change pip values. It's going to change depending on what the base currency pair is.
Yep.
Let's take a look at the dollar. This has been one that came up recently. We've been eyeballing. I actually, for a moment, was fairly bullish on the dollar as it started to bounce up, and then all of a sudden, the last 6 weeks, it has just been in almost a free fall. There's your weekly on the dollar index, guys. Right now, it's a critical moment, I would say. What are your thoughts on the dollar index?
The dollar. I mean, it's kind of funny story there. I actually. If you trade, you have the euro dollar in the currency markets, basically mimics it. It's the opposite, right? And I actually quit trading the euro dollar. And I've back tested all this, and I back test every 6 months, and then see what's working. And that was one of two pairs that was not not a good pair for me, right? One of two pairs. So I actually quit trading that. So I don't really look a lot at the dollar, but yeah, it's been dropping ever since, what's it look like here, April of this year. I mean, we're getting back to the lows from December. I mean, if we do break these lows of December, I mean, this could potentially keep, I mean, it's kind of a race to the bottom anyway, but this could potentially keep going either to the 85 mark or maybe even back down to the lows of 2014. There's nothing really stopping it. There's a lot of, it went straight up from 2014 to 2015.
Well, I have to put on defense mode here because now I said I was bullish on the dollar, guys. Was. And that's when we were looking at it doing this, right? We saw it basing, broke, and I'm basically looking from March and kind of doing a slow click over. Now you can't see my screen, Josh, but then when we broke through, guys, this is where I was saying, hey, I'm bullish on it. We seem to stabilize. We're making some higher highs, and then we kept on making higher highs. Things are looking great. And boom, that uptrend in any sense is gone. So now at this point, but I tell you, I agree with Josh. 89.50, you get down below that, and all of a sudden, it gets pretty ugly with regards to where we might be headed. You do have some lows. I agree with the audience here. I see 85s talk. I see 90s talk. Yeah, I think it could go certainly to 85. And I'll zoom way out here so you guys get a better sense of where 85 might be. 85 is down in here, right? And there's that really nice pop-up that happened all the way back in 2014 from that level. That's a long way down. And again, if we see that dollar drop from current levels, let's say it's 89.79 as we speak, all the way down to 85, guys, that's going to be a big pop for the equity market. That's going to be a big push up for that equity market. So be cautious of that one. We talked about on yesterday's show, what could keep the bull market rally going? Well, this dollar plummeting like this is certainly another one. And as we print more and more stimulus, the odds are that dollar is going to continue to fall. So right now, it is the ugliest one out there from a valuation perspective. But again, if you're trading the euro, if you're trading the Canadian dollar, it's awesome. Once you get past that 85 mark, I mean, that's a nice demand zone there. Yeah. There's nothing after that. No, I know. After that, you're like all the way down to 80. And I mean, that's at that point, I mean, I don't even want to speculate what that might do to the equity markets. I mean, that could really just blow things up. And, we've had Jeff Manson on the program a few times, and he was saying, I think he was talking, was it 6,000 on the S&P? It's like, man, we're like just over 4,000. He's like, yeah, I see 6,000. I'm like, man, it's not out of the ordinary. I mean, it's a long shot, but it's certainly a possibility. And if you get the dollar down in that 80 mark, that could really help fuel that rally up to those levels. Absolutely crazy.
Well, at 81, there's a nice little demand zone there. I mean, that's kind of where it all catapulted from after that 79, 80 mark. So yeah, it's quite possible.
What other currency pairs do you find interesting? Or maybe rephrase that question. What currency pairs do you trade with the most that you kind of have an affinity to? You got your regular pairs you like to trade, and why?
Yeah, so I got most dollar paired, Aussie dollar, dollar CAD, New Zealand dollar. I do trade for the franc as well, the dollar franc, dollar yen, obviously. So there's and the pound dollar as well. Like I said, I do not trade the euro, just for specific reasons. It just, this strategy didn't work out, and I was able to figure that out with back testing.
Awesome.
And so all I did was eliminate it. I mean, why trade something that doesn't work on the strategy, right?
Yeah.
But also do like the New Zealand yen, Aussie yen works very well with it, and the Aussie New Zealand as well. So kind of, I'd say 8-9 pairs or so.
Yeah, it's funny. I don't do any cross pairs, right? Unless there's something brought to my attention from somebody that's so like, I've got to trade that. I generally stick with just the majors as well. I haven't really found any that I find I had to eliminate from my trading repertoire, but I actually like that you pointed that out, that there is ones for you. And if your strategy doesn't work, don't fight it. Just go, okay, it's working on this one over here, so forget that one that's not working on. I'll leave it alone. Yeah,
and a certain pair too there's times where periods of time when I'm back testing that there's 20, 30 trades and some have 5, right? So it's like, okay, what is working, what is not working, but what's wasting my time as well. So, I'll be evaluating again next month actually and seeing what this year is doing. And do I need to eliminate, at this point, I don't think I need to eliminate any, but do I need to do anything different with those. Probably not, but that's the nice thing. But the strategy is it's based off 100% numbers, 100% price, $1.10, $1.20. And I can't deviate from that. If I do, I'm not following my plan anymore.
Right. All right. Jerry's funny. He says, please, I hate the Aussie New Zealand dollar. It's like kissing your cousin. Hey, well, you know what? If you can make money kissing your cousin, I'm just kidding. Don't.
I hope that's not from experience.
Let's see. Big Ab, of course. I told you this question was going to come in, but it didn't come from Brendan, who usually asks this question. Big Ab beat him to the punch today. He says, what crypto assets does Josh trade or hold?
Sure. So I've done, like I said, I've been in since about 2017 is when I started getting into it. And I think we were talking about on my show last time you were on, I've been telling myself I'm going to invest at least something in anything that I hear about, say it's a scam or that's not real or it doesn't work.
Right.
And so I one of those things I wish I would have started a little bit earlier. But so I've had some Bitcoin. I actually still have some. A big time in Ethereum. I felt at the beginning Ethereum, based on some of the research that I did, was going to be the top dog and the best.
Mm-hmm.
So I do like the blockchain, all that stuff. So Ethereum is a big one for me. And Litecoin, that was a very slow lagging, following Bitcoin and Ethereum. I currently do not have any left of Litecoin. Stellar Lumens, got some of those, and I do have a little bit of Dash for some odd reason.
I like Dash. I own all of those, and I own every single one of those as well, and obviously for many, many different reasons. But I think that, it's interesting for you as someone who didn't start as a start as a crypto trader. You started as a Forex trader. A lot of people ask me about this, and it's like, if you understand the naming conventions, like the way these cryptocurrencies are traded, it's almost like trading spot Forex. I mean, I'm looking at Polkadot, it's DOT USD. I'm looking at Ethereum, ETH USD. I'm trading the euro dollar, EUR USD. It's fairly simple transition for me. How I guess, let me ask, how does a dime strategy work for you on that one?
I haven't. So I do a little bit different strategy with that. I mean, quite frankly, in the past year, you throw a dart and you did well with cryptos. So my strategy, I haven't looked real deep in with the dimes. I'm going to with Ethereum. I just haven't done it yet. I'm assuming it's going to be very similar, but the problem is it moves so fast.
Yeah.
You never would get in. So that's why I haven't dissected it that much, because that's going to happen. I mean, you go from Ethereum from 3,000 to 4,000 in 2 weeks or something.
Yeah.
I mean, you'd have to break that down to you can definitely take the dimes and keep bringing that down. I mean, you don't have to do weekly and 4 hour. You could potentially do 4 hour and hourly, or hourly and 15-minute or 5-minute, based on how aggressive you want to be. So in the crypto market, it moves so fast. It's going to be tough. You got to be pretty active with it, in my opinion.
And when you look at your dime strategy, it doesnent have to be 0.10. I mean, obviously, something like Ethereum that's trading at $3,400, you're not going to be trading 10 cents. It's not like I'm looking to buy it at 3442.8.
No.
But you might be going, $34.40 to $34.30, a $10 range. But it's that psychological 10 number that you're looking for, right?
Yep. And I mean, I think if you look at it, I was just looking on my chart here. You can pull it up on your end if you want. I'm assuming Bitcoin probably has done that.
I certainly noticed the whole numbers. I haven't gone down into the minutia and looked at the 5 minute or the $5s and $10 mark. But you look at like historical numbers, the 10,000, the 20,000, the 30,000, the 40,000. Those big milestone numbers are generally going to have the big pushbacks. And you notice here we came in at 46,000 mark. We didn't quite hit it, but it came right up to it multiple times over the past couple days and is sold off aggressively from 46. Right now we're starting to base. We're hitting that 42,000 mark, and that's hit that a couple times. So I do like whole number psychology. I find it interesting with Forex how you like the dimes, Warner likes the quarters, and hey, great. Nobody can say anything bad against that. It's just a simple strategy that you like to use, and as long as your P&L is growing, who's to tell you to stop doing it?
Yeah, and if you look at Bitcoin, the high of 60, roughly around 65,000. I mean, if you're doing a 60,000 to 70,000, 65,000 is a quarter of that.
Yep.
So. I mean, it's the way it lands.
Jerry says it's nothing technical with cryptos, in my opinion. Well, I disagree. I think there is certainly some technical side to it. The challenge I think that we'll all experience with crypto is we still need to get the institutions in, and that'll leave greater footprints out there. But I've noticed for myself a lot of reaction to whole number psychology, and as you can see on some of the price charts, you'll look back historically and you'll see it bounce off a specific level, and you go, okay, well, clearly there was some whale buying or selling at that level, and as it comes back into it, looking forward to doing that again. Josh, do you teach? Are you doing any teaching out there?
I do not teach yet, but I am in the training process to teach as well. I do be doing some training tomorrow. As a matter of fact, it's funny you asked that. But yeah, so I will be starting to teach probably in the next few months here. I'm kind of shooting for. So in the future, yeah.
Looking forward to that one. You got a ton of experience out there, so why not share it with the world, right?
Well, it's fun too. You kind of throw some knowledge out there, help other people. I mean, one of my big things is, and that's kind of a lot of the stuff we talk about on Investing with Confidence is how to get started. I mean, there's so many people, especially, the people getting into the market right now, it's probably the highest it's been. I'm guessing probably since 2000, the dot-com bubble.
Right.
And people are getting in without education. They're getting in without the knowledge, and they're just buying. And a lot of these people, they're going to get burnt. I mean, I talk to a lot of my friends, even that I have. And we talk a little bit about trading and investing. And they don't really know what I'm talking about. But you hear the stories of, I was in this position, and God, I got emotional. I got out, and so I only had I broke even. Well, the more and more times you do that, you're going to get burnt. So if I can help some people at least be more confident in their investing and being able to get started, that's one of the big things I like to do. I mean, that's going to be fun to do. Looking forward here.
Nice. Well, looking forward to that. I know you're also your show. You have it multiple shows. So what's your schedule like? I know some people here probably want to check out your show. So what is your timing of that?
Yeah, so I put an episode out. It's every single day on my Twitter, my LinkedIn, and on YouTube. So it's called Investing with Confidence. I actually do a live show for the radio stations here locally here in Minneapolis. It's been international in Canada, Toronto, Vancouver, and probably 6 other cities on the radio here in the U.S. But I do that live on Saturdays, and I do a recorded one every week as well. So 2 new shows every single week, and I kind of break them apart. The live one I actually stream live on YouTube now on Saturday mornings at 10 o'clock Central Time, but the recorded one is 4 segments, so I put out 1 segment each day on that.
Awesome. It's as you've mentioned, it's a lot of work to do that live, so hats off to you.
It is. It's what, I actually like live better because when you do recorded, you're recorded, and if you screw up, you're going to start over, right? You don't really, it's better to do it live because that's real, right? If you screw up or say something silly, which it happens, you play it and you run with it, and it actually sounds phenomenal because people want documentation, or documentary. They don't want scripted or anything, and that's what I love about the live shows.
You know what? I have to disagree. You ask my viewers, they'll tell you I've never messed up on the show. I don't mess up at all. I am infallible.
Hey, I'll tell you what. It's your lie. You tell it how you want.
Yeah, right. I'm gonna create my own narrative. I mess up all the time, and I love it. It's part of the fun. We're all human, and whether I think I mess up at least one thing on my show every single day. And to Ed, who is up in San Jose, this is how much I mess up. I'll finish a show, and that once you do a live show, I have to close out a bunch of things, move over the video, strip out the audio, upload it, put a whole description on stuff. And I always do that, but so many times I just forget to hit the submit button. So I have everything done, and he'll send me a message at 6, 7, 8 o'clock at night going, need to upload the show. I'm like, damn it, Ed. Oh, yeah.
The best part is when you can't say a word. I mean, there was a word, peculiar. Oh. I think I said that right. You said I bet there was 3-4 shows 4 weeks in a row or something. I could not say that word in live, and we just made a joke out of it, and hopefully we got some laughs on it. But that was a word, I don't know why I couldn't say it, but you have a lot of fun with it. Yeah,
it is a lot of fun. All right, well, hey man, thanks for coming on today. I appreciate it. Let me know when you want to talk anything markets on either of our programs, yours or mine. Happy to help out in any way I can.
No, I appreciate being on. Like I said, I'm a big fan. You're doing a lot of good stuff here, and I hope to be on again. It was a good time here today.
It was. All right, man. Thank you so much. Have a good one, and I'll talk to you soon.
Thanks. See you, Merlin.
All right, bye. Guys, that was Josh Lillquist. He's got a program, Investing with Confidence, you can find on YouTube. Go check that one out. Give him a little love and support him out there. He's always trying to give back. And it's funny because he's invited me on his program a couple times. And one thing that you get from him is there's always this wanting to help. And it's sharing experiences, it's sharing information, and having been trading equities and such since 2010. Got a good amount of experience out there as well, so hopefully you guys enjoyed that. Brendan has been bugging Larry, who I think was in here for a moment. I will tell you that Larry is actually in EOS, and I can tell you his average price, I think it was $350. And the reason I know that is he was around the office, he was asking me, he had some Litecoin, and he was asking me, he said, hey, if you could invest in one thing right now, what would it be? I said, I don't know if I could narrow it down to one. I could do others. Give me three. So I said I would do Polkadot, I would do EOS, and I would do Cardano. And he ended up picking EOS, which of course in hindsight turned out to be a pretty damn good bet because he got in, I think, at 350 and the thing hit $15. But now down around that 940 mark. So there you go, Brendan. That's what he's in. And I think he might have some other ones too, but that's one of the positions I know that he's in. Pep, particularly Merlin on Fridays. Actually, I'll have you know, I do think that the Friday show goes smoother than most days. So maybe I need to just drink more often. I have one glass with the show every time. Yeah. Cool. Yeah, and by the way, it was interesting. I've been doing a lot more research because I am most likely going to be building a full-on crypto program for Online Trading Academy that's going to be pretty robust. We're finalizing everything on that right now. But, interesting as you look out at these different projects, two that I've been digging deeper and deeper and deeper to on a regular basis are Polkadot and Cardano. And what's interesting is if you look at Gavin Wood, who started Polkadot, and you look at Hoskinson, who just started Cardano, both of these guys worked for Ethereum at the very beginning. The real brain, I would say, would be Gavin Wood. He's just a phenomenal genius with regards to technology. But I like Hoskinson as well. And these guys both, they saw the vision of what EOS, what Ethereum was supposed to be. Unfortunately, when they started out, they started with a different architecture and now have to change, potentially go to a proof of stake architecture, as well as work on scalability issues, which you look at that right now, Cardano and Polkadot have, for all intents and purposes, fixed the scalability issue. So with regards to that, they're already ahead of Ethereum. The big difference is Ethereum has so many more programs on their ecosystem right now, but that may change going forward. And I think this is why, for anybody who's a hodler like Brendan and Big Eb and some of others, you have to look at Ethereum's the lead dog right now, probably will continue for some time, but if they don't fix their gas fees, if they don't fix the costs for transactions and a few other things in scalability, then these other guys are going to all of a sudden start to gain a lot of market share. And, Ethereum may not be the big dog at the very end of it all. Right now, they are clearly the behemoth, which is leading the way. Cool. Let's see. I want to go into a couple things from an economic perspective, at least talk about some economic data today. By the way, for those of you, I did have this up here. I'm hoping that everybody's still sticking to it. I tell you, it's so tough on weekends. I told you my thing is Fridays is I take the day off. But Tom, I hope you're still doing 150 bodyweight reps. Brendan, I hope you're doing those 50 push-ups a day. At this point, for those of you who are doing that type of stuff, the soreness should be going away. Thomasina, how's that book going? Come on, you should be done with that thing by now. Okanola and Les, you got your walking to do. Sue's going to walk as well. Jerry, yeah, I want to see some video of 300 push-ups a day, buddy. You've got to be just ripped. I mean, you guys, you do the Olympic rings. Leslie doing 100 push-ups a day. Hope that's going well for you. Walter and Pepper, both of you doing trading-related challenges for May, and then Pepe is doing 50 push-ups and 100 crunches. I hope that you guys are all sticking with that and doing well. And I know it's a challenge to do it, but you know what? It's fun to have some goal to set and move on through and get better and better. All right, what do we got cooking? This is what was happening for today. Now, there isn't anything really that bad noteworthy-wise. I was actually watching this GDP number for the European Union. You can see at the top there. I know it's kind of hard to read, especially for those of you who are on mobile devices. And those of you listening to the podcast, you can't see a damn thing, but I'll try to walk you through it. The expectation was that we're going to come out at negative 0.6. That was the exact same as the previous reading. Came out at negative 0.6, so whoever did the estimates there knocked it out of the park. They did great. Other than that, we did have some changes here with regards to building permits and housing starts for the U.S. You guys can see that there. And then we still have, coming out later tonight, you have CPI, PPI, RPI numbers. Now, This is the earnings for today. You had Walmart, pretty nice earnings beat. They were up. They beat earnings by 38%, posting a 2% gain for the day. Home Depot also beat by almost the same amount, but they didn't quite get the same result, down almost 1%. Macy's blew out all earnings expectations. Not only did they not lose money, they're expected to lose 41 cents per share. They made 39 cents per share. I just let that sink in. You imagine you tell people that, hey, you know what? We're expecting to lose 41 cents per share, and you actually show up making 39 cents per share. So not losing, but you got a profit. You would think those share prices would be going through the roof, and there is a massive party going on over at Macy's. Yeah, not so much. As you can see on there, down 0.31% on the day. And then you had Baidu as well with pretty good earnings, and they were slightly down. So a choppy, weird day on the earnings front. And again, I think a lot of it has to do with those bars have just been set so low that it's easy for them to get over. If you look at economic calendar for tomorrow, Canadian markets have a lot of CPI data, which I know Brendan's going to say, it's all a lie. Yes, it probably is, but at least it's a piece of data that markets are going to react to. That's at 5:30 in the morning. Later on in that day, you have crude oil inventories for the U.S., and they're expecting there to be a lot more supply coming into the marketplace, which if you watch that chart of crude oil, it's been looking pretty damn good lately from the bullish perspective. Unemployment rate coming out for Australia, but that will be tomorrow night after this show. Earnings for tomorrow? Well, check out Cisco Systems. You have Target. Let's do the before market opens. Before market opens, you have Target, JD, you have Lowe's companies, and TJ Maxx or TJX companies. And then Cisco will be after market close, as you can see there at the top. And that's an interesting one because Cisco is a member of all three major market indexes, the S&P, the NASDAQ, and the Dow. Okay, that will do it for me. No sore anymore, right? Leslie says no sore anymore. And boy, I tell you what, that first couple of days, my chest was killing me doing 100 push-ups a day. Now it's actually my rhomboids, my muscles in my back that are the ones that are actually hurting. Winners watch catch. Oh, I'm going to watch some cat videos instead. Let's see, what else do I got? Let me see if I got any last-minute ones. XAH was the guy who started BitTorrent. Cool. BitTorrent, I think BitTorrent actually has some potential out there as well. Signature Series Crypto sounds good. Yeah, I did stick to my guns. With no Signature Series slated for now, but there might be. I have a lot of different ideas on what to do. All right, what else we got? Why are equities weak? I guess it's just people looking for a place to park their money. Let's go take a peek at those equity market indexes. You had the S&P, which was down 1% today, and it's the way that happened. Here's your daily on it. Oops, it's funny because one website, their mouse wheel scrolls, and the other one it doesn't. Let's go back to, let's say, an hourly on this bad boy. And you can see that really that weakness coming in near the end. Why did we have this mapped out? It was because of this kind of double bottom pattern over here, but that box could be erased. It ripped right through it, so I wouldn't call that coming into demand. My assumption is just generally rotation of capital moving out. Some of the economic data wasn't that great today with regards to housing. Most of it happening in the last couple hours of the market, but why is it weak? I don't know. You could just say the same thing as why was it strong near the end? Real Equities goes, I'm on it, Pepe. No real reason. I don't see any real specific reason other than that. I actually thought that the technology side of things would be weaker than they were today. It's funny how you notice where we've rallied from, especially on the NASDAQ on the hourly. We're just bouncing back and forth in this range. We could almost throw a yellow box on this bad boy and let it sit and see how long this will bounce back and forth between these two zones. But right now you're sitting right at the bottom of it. I don't think that this is anything really noteworthy on why it was weak. It's not like it was a major down day. It was just showing a little bit of weakness, right? We're still kind of on the hourly anyway. You're range bound. If I go daily on the NASDAQ, this is a pullback up into that area where it bounced off of. So this line that we had here at 13,379 on the NASDAQ 100 futures, right? That's where it had trouble getting below it. It ripped through that on the, let me get the right date for you, on the 10th of May, retested it, and now just starting to show some sell-off. So I don't think you'd have any problem selling off even further just because we got a nice double top put in place. The trend is now to the downside on the NASDAQ. So my bias would be, at least in the short term, looking for a little bit more shorting opportunity. Now, if I look at S&P 500, similar, but not as good as the NASDAQ. It's that real big whipsaw that we had last week is kind of the challenging piece of this one, that big sell-off followed by a big bounce. Now you're seeing a couple days of weakness. If you look at that, the formation, I talked about this kind of being what's called a broadening formation, which is something that looks like this, where you have a series of higher highs, but you also have a series of lower lows. This is one, some call it a megaphone pattern. Typically, they say it follows the direction of the previous trend. I'm looking at it as where's current price within that range. You're in the lower portion, but still near the middle. I would just leave it alone. Nothing to see there with the S&P. Now, Russell is just more chop. I mean, this is a daily chart, and you can see it just bouncing all over the place. No real clear direction here. So if you're a day trader, this is great. If you're a swing trader or investor, move on. Stay away from it. Nothing to see. Now, we've got our crude oil, which has been looking great from an ascending triangle perspective. If you watch the Monday morning must-knows I did for Online Trading Academy, this is one of the talking points was, look, I'd keep my eye on this one. If we get a close outside of this range, and it's continuing on this week, let's move this line up here. Now we're right through there. I still think you're 66.80. I'll tell you what, if you get a close above $67, might want to start looking at a long position on crude oil or some derivative of it, because that's a beautiful ascending triangle, and that tells you that for the past month, pretty much just been all buying going in. Yeah, we had a little sell-off in early March, but April, May, it's been higher highs, higher lows, and now we're challenging those highs right around 66.80. So it looks really good to me from a bullish perspective. And last, what do we have on here? Bitcoin. Well, obviously, Bitcoin is broken down below some most recent lows. It does not look good at this point for Bitcoin. You know, could we challenge 35,000? Yeah, absolutely. You know, there is a lot of justification for people taking some profits here. What's interesting is if you look at what Elon Musk was talking about, that Bitcoin is a complete waste of money, a waste of energy. There's been multiple people sent me today, and I don't know the numbers off the top of my head, but it looks at the banking system. And if you remember what Bitcoin was designed to do, it's basically giving the middle finger to the financial institution, saying we don't need to have a financial banking system when we can manage our own money with a digital currency. Why should I keep it at a bank and get paid nothing when the bank makes money off my money? Why can't I keep it in a digital asset like Bitcoin? And if I want to send it to Brendan, I can send it to him right away. If I want to send it to Sheena, done. I can send money in just a matter of a couple minutes. But also I have the ability to take that money, lend it, collect interest, stake it, do all kinds of different things with it. So wouldn't a fair comparison between Bitcoin be what is the banking system using regarding energy? And the banking system uses twice as much energy as Bitcoin. So by that rationale, Elon Musk should stop accepting dollars for Teslas as well. Merlin, is that the head and shoulder pattern on the Bitcoin chart? I guess you could argue that that's a head and shoulders pattern. If it is, it's really more of a Quasimodo pattern, right? The kind of a hunchback of Notre Dame. And let me see if I can do this. I always forget to do the drawing tools on. Remain in drawing mode. Here we go. So, you know, how do you draw this? You go one, there's your left shoulder, there's your head. We'll draw that down, comes down to the neckline, bounces back up, and then we come down to, there you go. So you could argue that there is your head and shoulders pattern, right? And maybe it's along the lines of this. So if you believe that, the way that people will measure it is they'll say, I'm going from the peak here to the neckline using this as a measuring object. And then from there, let me get out of drawing mode here. And then you take that and you move it to the downside. So let me escape out of my pen. And what would the target be? If that was true and it did follow the pattern, Bitcoin would be at a shocking right at $30,000, which, you know, it could happen. I mean, I don't think you'll get that low on it, but hey, anything can happen. And the funny part here is, if you guys follow on Twitter and Instagram and all these things, especially on Twitter, you get all these people that are screaming at Elon Musk saying how he's destroyed Bitcoin, how he's ruined Bitcoin. It's like, you do realize that Bitcoin rallied up over 500% and had a 50% sell-off. If you spend your career getting things that run 500% and they drop 50%, you're going to be so filthy rich over time. It's just an unbelievable percentage gain. But people see this most recent drop and they're pointing at Elon Musk, blah, blah, blah. It's still much higher than what Elon Musk bought his original Bitcoin at. Remember, he bought his Bitcoin at $38,000. We're currently at $43,000. So he's still up on his Bitcoin. If anything, I think that this is going to give more people an opportunity to buy into it, especially as the discussion changes from Bitcoin uses too much energy and it's a waste to, wow, what other industries are wasting energy and don't serve a purpose or don't give as much value as Bitcoin does as a store of value, a place to keep your money and keep it out of the hands of an inflationary environment like the US dollar. So very interesting to see going forward. It could be the banks manipulating. I don't know necessarily. Banks are probably why the middle finger is even. That's a good one, Harrison. But certainly I think the banks are are fighting back. I think that they're going to be ones slandering Bitcoin and digital assets as much as possible. All right, I did not plan on going this long for the show today. Email address is on the screen, TraderMerlin@gmail.com. If you like today's show and if you're new, do me a favor, click that subscribe button. Of course, usually it's the regulars that make it all the way through to the end of the show. The newbies, they usually drop out of their first few minutes, but thank you guys for making it all the way through to the end. If you like it, give it a thumbs up. If you have comments, questions, or something that you want me to cover tomorrow, I don't have a guest on tomorrow, so I have no guest tomorrow. I will have a guest on Thursday. We're going to have John Rowland on. That's going to be a fun show. I'm actually going to have a cocktail ready for that show for two reasons. Number one, it's called The Life of a Trader. So basically, we're going to hear about what John would do as a floor trader. Like, how did he plan his day? What are the things that a floor trader would look at? How do they set up their day, plan their day, manage their day, make trades? What was it like to live in that environment? And then no show on Friday because I have a big meeting I cannot miss regards to the whole cryptocurrency program for Online Trading Academy. So I have no show on Friday, which is why I will be having a cocktail on Thursday. All right. That's going to do it for me. Hope you guys enjoyed today's show. Again, if you like Josh Lillquist, you can check him out as well on his YouTube channel. I think I had it up there earlier. YouTube channel is called Investing with Confidence. He's got that, and hopefully we'll get more information on his upcoming class here soon. Good to have him on the teacher role. Guy's very, very bright, knows a lot about the markets. Cool. That's going to do it for me, everybody. Hope you enjoyed today's show. Hope you enjoyed Josh as well. Be safe out there. Happy trading, and I'll see you tomorrow. Take care.